home prices don't correct very often. They don't drop very often. In fact, 4 out of the 6 last recessions, home prices increased rather than decreased. And, one of those
Crazy.
two, there was an exception. Denny, you know what that was? That was the Great Recession, right?
Right.
So, and that was a recession that was caused by a housing collapse. So home prices actually don't fall very often. And that makes it all the more wild that nationwide home prices have started falling. And Zillow projects that nationwide home prices will fall 1% over the next year. That's obviously not equally proportioned, right? I mean, some markets are going to keep going up in value, others are going to really crash. So, uh, yeah, Denny, let's walk through some of the cities around the country that are projected to have the biggest home price crashes. And the way that we have split this up is the five small cities that are projected to have the deepest overall housing crashes over the next 12 months. And then, because most people aren't living in these tiny towns and tiny cities that are projected to really fall, we also looked at the 5 major metro areas that are projected to fall by the most. It's actually 6 because 2 of them are tied. Uh,
Of
so,
course.
of course. But yeah, one final note about housing market corrections and crashes. It's not like stock market corrections and crashes. So, stock market's very volatile. So a 5% or a 10% correction in the stock market is really not that big of a deal. If home prices fall 5% in the market, that's a really big deal. If they fall 10%, that is like a bear market in a housing market.
It's
So
kind of crazy because at the first time in probably 2 years, homes are sitting on the market longer.
yeah, inventory
And
is way up, something like 30% year over year
yeah,
nationwide.
it's nuts. And I just remember having to jump in and deal with bidding wars, and that it's very quiet now. You don't hear them anymore.
Yeah, and homes are sitting on the market a lot longer too. Listings are sitting on the MLS for much longer. So nationwide, it's still not that long. I'm looking at the data from Zillow right now. It's 17 median days on the market to pending. Um, but that is still higher than it was 6 months ago and
Oh
higher than
yeah.
it was a year ago. So that is trending upward. And in some of these markets, it's over 50 days on the market, median days to pending. So, all right. Well, on that note, let's dive in. We're gonna look at the 5 overall cities that have the highest forecast for falling home values. But because these are all small cities, we're then going to skip to some of the major metro areas. So the 5 overall cities projected to have the highest drop in home values, and this is according to Zillow data, by the way, Zillow projections over the next 12 months. Greenville, Mississippi is projected to fall by 16.7%. That is a massive drop,
Yeah, that is.
huge drop in home values. Clarksdale, Mississippi, number 2, projected to fall 14.8%. Pecos, or is it Pecos, Texas, projected to fall 13.7%. Cleveland, Mississippi, not Cleveland, Ohio, worth mentioning there, the big distinction, predicted to fall 13.6%. And then Bennettsville, South Carolina, projected to fall 11.9%. Now, what you probably noticed about all 5 of those cities, those are all Sunbelt cities in the
Mm.
South.
It's
Um,
interesting that 3 of them are in Mississippi.
yes, they are. And, that is, these are a lot of these, not all these, but a lot of these are also Gulf Coast cities, maybe not right on the water, but, still close enough to the Gulf to be getting those huge hikes in insurance premiums that
Oh,
we've
right,
really
right,
seen
right.
along the Gulf Coast.
Mm.
And in other parts of the country for other reasons. For example, in on the West Coast, California, Oregon, and Washington, you're seeing huge insurance premium hikes as well, not because of hurricane risk, but because of wildfire risk. But cities within a couple hours drive of the Gulf Coast, you've really seen this huge surge in insurance premiums, and that is putting downward pressure on home prices there,
Mm.
because it all just adds that all adds together as affordability for housing there, because most people are, of course, calculating their uh, what they can afford in
Right.
buying a home based on the monthly payment, and that includes the insurance premiums.
It's
So,
amazing. I was just in Florida just to see the amount of vacant homes and homes just listed. The increase has been like ridiculous.
talking about the increase of inventory.
Yes.
Yeah. Well, and that's one of the things as well that it's been both a blessing and a curse in a lot of these Sunbelt markets, where they tend to have less regulation as far as new zoning and new development for building new housing, which is great for affordability and
Mm.
keeping, in a lot of places in Florida and Texas, for example, um, we've seen a huge explosion in new housing development. And Denny, you and I have seen this play out in some of the multifamily investments that we make in the co-investing club. And it's great for affordability. And that has also helped attract more people moving there from high cost places like New England or from California. But, that also keeps home values, that's the flip side of affordability, right? Is it keeps home values more modest. So sort of a double-edged sword. But cost of living and quality of life are pretty good in a lot of these Sunbelt areas. So, Denny, any final thoughts on those 5 overall cities with the highest projected fall in home prices over the next year?
No, I think it makes sense. And I think even when I was in the midst of bidding wars and increasingly crazy house price rising, we all knew it was going to happen. So,
Yeah, yeah, absolutely. So let's switch gears. Let's start talking about the 5 major cities that are projected to have the highest crash over the next year. Technically 6, because 2 of them are tied. All right. Number 1, New Orleans, Louisiana, projected to fall by 7.2%. That's a huge amount, especially for a major city, which New Orleans is. It's a
yeah.
major city. So, some of that is what we were just talking about. Surging homeowners insurance premiums in New Orleans, right there on the Gulf Coast. They've really gotten hit hard with insurance premium hikes over the last 2 or 3 years.
Do you think the vacation, because it is a big vacation area, New Orleans, do you think because of the way the economy is, they have also been hit there?
That's possible. Earlier this year, there was a huge decline in domestic travel and domestic air travel. And there's been a big drop in foreign tourism to the U.S. as well.
Wow.
For all kinds of geopolitical reasons that we don't need to get into on this podcast. But yeah, tourism is down, both domestically and from abroad. New Orleans also, it has some similarities to Baltimore and Philadelphia, where you and I are both based, where there is some vacant housing in New Orleans, unlike a lot of other major cities like San Francisco, where there's basically no vacant housing. There is, and there's some urban decay in New Orleans that you don't have in places like San Jose, California, right?
Right.
Or Phoenix or Dallas or. So New Orleans is a little bit of a unique market, and it's got a lot of headwinds against it at the moment. So next on the list is San Francisco, actually projected to fall by 6.1%. Very different dynamics driving that fall in home prices, or that projected fall in home prices. For really the last 2 decades, San Francisco home prices just shot up too far too fast.
You're right.
And the median home price there is around 1.3 million. In fact, I mean, we can check that right now while we're talking about it. Let's go to Zillow and just check it out. There it is. Yeah, it's almost exactly 1.3 million. It's 1,292,000.
Wow.
Basically. Which is just nuts. People complain about the high rents in San Francisco, home prices are proportionately way higher than rents in San Francisco.
That's just in California as a whole, to be honest. But
Yeah, high property taxes, high income taxes, high homeowners insurance premiums. Um, God, I mean, in San Francisco, you've got earthquake risk. You've got, I mean, I guess less fire risk in San Francisco because it's at the tip of that peninsula, but still, and you've got all kinds of stuff going on there. So, yeah, San Francisco overshot its local fundamentals, the local economic fundamentals of what incomes can support. So, any other thoughts you want to share about San Francisco?
yeah, no, I just think again that's quite interesting. It's
Yeah, and these five major cities, they're not quite as uniform as what is causing the decline in some of these cities. So the next one on the list is Austin, Texas. So that one we talked about, it's that same dynamic we talked about a minute ago with some of the smaller cities where Austin has just seen too much new housing development over the last few years. And that so supply has outpaced demand, even though it's there. It does have population growth. People want to live there. It's a cool city. High incomes, high average incomes in Austin, but they've just overbuilt new housing because they do have pretty housing friendly policies there. They want to encourage development. They want to keep it affordable, um, but it's just correcting downward because there's been too much new supply. Um, Next on the list, number 4 is San Jose, California. Same dynamic as San Francisco. We probably don't need to rehash that too much, but it just overshot the local fundamentals of what incomes can support. Also, crazy high median home prices in San Jose. And just for gits and shiggles, let's pull that up. So, oh my gosh, yeah, it's it's even higher median home prices than in San Francisco. So San Jose median home price 1.462 million. Yeah, just crazy.
and that's
So,
median. That's
uh,
crazy.
yeah. Well, actually, I think that's mean. I think Zillow uses mean for these.
Okay.
So I misspoke actually when I said median. But still, crazy high home prices. All right, number 5. We actually have a tie for 5. So Honolulu, Hawaii, and Denver, Colorado, both projected to have a 3.8% fall in home prices over the next year. And by the way, we may not have listed the projected falls for Austin and San Jose. So let's recap these real quick, and then we can dig a little bit more into the 5th place tie. So New Orleans, projected fall 7.2%. San Francisco, projected fall 6.1%. Austin, Texas, projected fall of 5.1%. San Jose, projected fall of 4.0%. And then Honolulu and Denver, projected fall of 3.8% in home prices.
Have you ever seen a place in Hawaii on one of these lists?
No, that's a great point. Because real estate is so limited in Hawaii, and there's so much demand for people to live there, especially wealthy mainlanders moving there, that you just almost never see Hawaii real estate prices fall. But again, I think it was one of those places that in and after the pandemic, home prices just shot up too far too fast, and they exceeded the local fundamentals. But I mean, you make a great point that you almost never see Hawaii home prices fall.
It's nuts.
And
Which
then
says a
Denver,
lot right there.
yeah, Denver, same kind of dynamic. It shot up too far too fast, and it was one of those pandemic darling cities. Just overshot the local income fundamentals. So,
Wow.
Denny, any final thoughts that you want to share about these cities or just the market at large, as we enter, later 2025 and the first half of 2026?
I just think that we've seen this before, maybe not at this type of values, but I just think that well, what is it that you always say, Brian? Don't time the market. So obviously you don't want to time the market, but you also have to be pretty smart in what you're buying and everything else. You got to take all this into consideration.
Yeah, absolutely. And that's one of the nice things about the way that we invest in the co-investing club is it's month in, it's month out. We practice dollar cost averaging, and the dynamics that affect those prices for the commercially zoned properties that we're doing, multifamily properties, industrial, retail, mobile home parks. It's a totally different dynamic affecting the pricing for those than residential 1 to 4 unit home values. Um, so, and that's actually worth mentioning that from late 2022 until early 2024, there was a 25 to 30% crash in multifamily property values in the US, even as residential home prices continue to rise. So, they're priced differently. They work based on different market dynamics. So you have to be really careful extrapolating between even like residential multifamily properties versus like single 1 to 4 unit residential properties. So,
Right.
yeah, it's a different game, and but we're in this for the long haul,
Right.
and we're also in it for the cash flow as well. So, we are not biting our fingernails looking at how multifamily property values are trending up or down or moving. We're more worried about, what's the cash flow right now, and is there enough runway on the loan for us to just keep enjoying that cash flow and wait for a better market to sell.
Right.
So, anyway, Denny, any other thoughts?
No, no, I just think it should be interesting to continue to watch this.
Yeah, absolutely. So, guys, if you got a fresh perspective from this episode, subscribe to the show and check out our free course on how to invest passively in real estate. If you don't want to become a landlord, but you still want the cash flow, the appreciation, the tax benefits of owning real estate, we have a free course on that. It's very quick. Each video is like 10 minutes long. Sparkrental.com/free. And on that note, stay weird, unconventional investor.